Welcome to the room. Good to see you guys. Steve Diego, nice to have you. B, nice to see you back. Gino's in the room. Victor's in the room. Andy V. Andy, man, you said you weren't going to be here, and now you're here. You can't toy with my emotions like that, Andy, man. I prepared myself for the sadness, and boom, there's your smiling face. Good afternoon, Miss Jen. It is great to see you. Guys, welcome to the room. So good to have you. Hope everybody's doing well. Hope you're excited to be here. First up, you guys know we're going to do it. It's Wednesday, July 30th. We're going to check some news. Been an awful lot of conversations in the news this morning already. There was non-farm employment. That created a spike. There was a GDP, and that created a spike. So what's next? 10 a.m., guys, we have some medium impact pending home sales. 10:30 a.m., we have crude oil inventories. And then at 2 p.m., we have FOMC, the federal funds rate, FOMC statement. There's the FOMC press conference. I have a 2:10 tea time today because FOMC is absolutely nuts, guys. We check news each and every morning because I want to make sure that I'm not trading into something that could just disrupt the market. There is this crazy emotional freight train that is very often associated with high impact news. We can avoid it with a simple stop at forexfactory.com/calendar. We're going to go through today, and it's kind of cool. We're going to do what we did yesterday. We're going to do the same thing that we did on Tuesday. We're going to do the same thing that we're going to do tomorrow. And we're going to start on NinjaTrader, and we'll work our way into TradingView, don't you worry. But guys, we're going to start on NinjaTrader, and we're going to talk about a high probability trend trade. We're going to put the pressure on ourselves to only take trades when rules are met, because these three rules that create a high probability trend trade, guys, these have been proven to win more than they lose. These are three rules that are the core of everything that you do, your foundation, something to grow from. And guys, this is a trade that builds a lot of confidence, because when you have the potential to win 70 to 80% of the time, they say that confidence comes from the memory of success. I'm inclined to agree. So we're going to focus on this first trade, because this is a trade that teaches you to read your indicators, guys. This is a trade that teaches you to look at your workspace and to say, wow, I have the advantage of momentum because I can see those strong triggers. I know that I have a clear path because no termination conditions are present. And now let me go define an entry. Let me go define an entry that allows me to capitalize and take advantage of these first two core advantages, guys. And momentum and path. You're going to see people in this room whose entire plans are built around momentum and path. So I encourage you to learn these two, and you'll find that entries seem to just fall out of the sky. We're going to talk about the indicators that we're using. I want to make sure everybody is totally clear on what you're looking at. You got to know the pieces if you're going to find success, right? Triggers are going to be on every chart that you see. You're going to see small triggers, the two solid lines. They're a fast-moving average. Whether it's a big chart or a little chart, triggers are always triggers. You're also going to see the large triggers. They're a little slower moving. And once again, whether it's your large chart or your small chart, triggers are always triggers. And we're going to use them in everything we do, guys. Triggers tell the story. Triggers are going to be the look that gives us the advantage of momentum. Trigger lines are going to let us know if we've reached a termination condition. Trigger lines on NinjaTrader are even going to help you define your perfect entry. So smalls and large, and that's as in-depth as you need to be with them. You're also going to see areas. Areas are horizontal lines that run across a large chart, guys. Areas have the potential to stop the market. That's the easiest way to think of it. If I see a horizontal line, I have to believe that it could stop the market. And I'm going to teach you how to recognize whether these areas are problematic, whether they're targets, and how to use them. So you're going to see divergence high lines. These are magenta lines. I tried to color code. I went back to my color-coded picture for you guys. And these magenta high lines let you know that the market went up and down, created a pivot, and there was a loss of momentum in the move. That's all it means. Divergence is a loss of momentum. If it happens from a low pivot, you'll see it as a cyan line. If you're not color savvy, that's okay. It's hot pink straight out of the 80s and kind of baby blue. You're going to see Fibonacci resistance. Fibonacci resistance is an accumulation of tens of thousands of calculations, giving you a very precise point where the market may reverse. If the market's trending down, you'll see the blue line is Fibonacci support. You're going to see yellow one-to-ones, guys, and if price trends up, these one-to-ones may behave as resistance. If price is trending down, they may behave as support. And then finally, you're going to see a mid-band. Hey, Pibbies! Is in the way to see the charts. Okay, let me figure out how you're going to get that out of the way. Let me try and reload my charts real quick and see if that changes your view. Let me know if that helps. Did that get the picture up for you? I'm trying to figure out what that was. Pibbies, did that work? I reloaded my side to see if you could see it. Down at the bottom of your page, you should see a pop-out button. And I'm going to get on the horn and get you some help. I called in the troops for you. Can you hear me, Pibbies? Can you let me know if that worked for you? Did we lose you? I don't even see him in here anymore. All right. I try to be helpful, but if you need help, stick around for it. Guys, all of these areas are where decisions are made. You can hear and see me. Thank you, Pete. All of these decisions all of these areas are where decisions are made. So we're going to use 3 rules. That's it. We're going to find these 3 rules using those indicators on 2 charts, guys. We're going to use a large chart. This is a slow chart. It's a very broad stroke of a brush. It's a slow moving chart. It's difficult to see change on this chart. And it takes the very first bar, the most current bar, and you'll be able to define rule number 1 as true, giving you the advantage of momentum. You'll be able to define rule number 2 as true, making sure that you have a clear path. When your first 2 rules are met, you'll go to the smaller, faster chart. And this faster chart is a refinement chart. And inside of the 1 bar on that large chart, you're going to see a pullback, you're going to see a bounce, and you're going to see continuation in that highest probability trend trade. Rule number 3, the advantage of an entry area comes from a pattern that presents itself on a smaller, faster chart. By using this smaller, faster chart, you're able to reduce risk. You're also able to increase profitability. We use these 2 charts because they are a direct reflection of who's in charge of the market, who's making things move. Whether you are on NinjaTrader or TradingView, it doesn't matter, guys. The large crowd wins, and that's what your big chart is. The big crowd are the people that establish the trends. The large crowd are the same people that create that momentum. The large crowd react at those key areas that you're going to see on the large chart. So the large crowd is the world's greatest lazy river, guys, and you can either go with the flow and have the highest chance of success, or you can fight it tooth and nail and you could lose more than you win, which tends to be the case. Which brings us to the small chart. The small chart are the fighters. These are the men and women that hate the large crowd. Maybe they stole their milk money in elementary school. I have no idea. But when these guys want to go up, your small crowd wants to go down. We love the small crowd. We rely on the small crowd because they will push us to our perfect entry, guys. When the large chart says up and the small crowd wants down, they fail typically 70 to 80% of the time. Rule number 3 will define precisely where they're most likely to fail. This becomes your entry for the highest probability trend trade. And once you learn these 3 simple rules, how to define momentum, how to recognize a clear path, and defining an entry, it opens the doors for the rest of the trades, for the other opportunities in the market. So I don't teach you this trade to hold you back or harness you. This is the trade that's going to teach you to read your indicators, guys. So we're going to go through each rule individually real quick. Let me know if you have any questions. Let me know if I can be helpful. Let me know if you need a little extra. Momentum is defined through trigger lines, guys, and momentum is the same whether it's TradingView, whether it is NinjaTrader. When the background is green, the market is in an uptrend. I'm looking for rules to be met for high probability trend trades long. Small triggers must be green as well. Large triggers have to be green. These Rinko bars are quick, and these colors matching is going to let you know that you at least have the potential for strong triggers. Strong triggers means that your smalls have broken away from and above the large triggers, and your large triggers are wide and in the direction of the trend, guys. And it looks like scissors that are open, and when the scissors are open up or the scissors are open down, smalls below the large, space between, the odds are favorable for the market to continue in the direction of the trend. We use the phrase odds favorable momentum in this room all day long because odds favorable momentum pushes the market in the direction of the trend. Odds favorable momentum is what we look to break those key Fibonacci areas when they have the potential, and odds favorable momentum is even going to cover some of the mistakes that you tend to make. When the scissors close, when the small triggers work their way inside of the large triggers, this is when we have weakness, and weakness is the opposite of strong. I want you to feel that way. And when I have weakness, anything can happen up or down. The odds are no longer favorable. So strength, rule number 1 is met. Weakness, rule number 1 is not. Do you have a video to read all the rules? Of course we do, Pibbies. Can I make it even easier on you? Not everybody wants to be in class. I get it. Let me give you this document right here, Pibbies. This is everything you need to understand the rules. And this document called Trend Trade Simple is what we're going to do this morning, guys. We're going to talk about momentum, path, and entry. I'm going to remind you that momentum and path are the core. Here's your rules. Here's the charts they're found on. Here's the indicators you're using. Defining the first rule. Defining the second rule, defining your entry, all the way down to how to study. So absolutely, it's 2 pages. We've simplified it. That's going to be the one. If you would prefer to watch a video, maybe you're not a reader, not everybody is, that's okay. If you go to the live section, I'm going to back it up a little bit, and I'm going to give you a link. Because this link is going to go back about a month and a half, and the first hour in that video is going to be each rule broken down individually, very specifically set up for you. And then come on back to class if you have any questions. So guys, momentum leads the way. Momentum is the core. Momentum sets the tone, but momentum isn't enough, guys, because there's areas on a large chart, and each of these areas are where the large crowd are making decisions, and when they're in the way, we have what we call a termination condition, and a termination condition is just a horizontal line on a large chart that could ruin your good time. And when there's none in the way, we're going to say we have a clear path, which means that there's nothing in the way on that big chart to create a bounce against your trade. So a termination condition is nothing more than counting trigger lines. And it begins with allowing the large crowd to get to that line. So I need to figure out a way to make this picture better, but until I do. This is your recipe for defining a termination. This is your recipe for defining the potential to break. This is your recipe for defining a clear path, guys, and it all revolves around the triggers. So it begins with price coming up and reaching one of those horizontal lines. Fibonacci support, resistance, 1-to-1s, divergence highs, divergence lows. When the price reaches there, this is when the large crowd makes decisions. So count how many triggers get through that line. And if the answer is 0, you've reached a termination condition, guys. And a termination condition means that this area is more likely to hold, more likely to create an untradeable bounce, more likely to take profits out of your account, more likely to impede forward progress. So every time price reaches an area and no triggers break through, you can see it here. You can also see it down here. Rule number 2 says no trades into the area. If 2 of your trigger lines get above the area in question or below the area in question, now the area has the potential to break, guys, but 2 triggers is not a very strong indication of a breakout. It'll never be a clear path, and any opportunities that you take with this are going to need to be managed pretty assertively. Your next option is when 3 of the 4 trigger lines break through, and I'm going to give you guys this picture as well. When 3 of the 4 trigger lines break through, what you have now is the potential to break still. It's only potential, but 3 triggers is your best look to take a trade with that potential. It gives the highest chance of success trading the potential for this area to break. Once 4 triggers get above these yellow 1-to-1s, or once 4 triggers break below Fibonacci support, now the area is broken. And now the path is clear. And guys, these termination conditions are going to show up all day long, especially on FOMC day when the market can't figure out what it wants to do. What a great example. 90% of your day is spent waiting for advantages, guys. And I want you to see how effective Fibonacci is. We're not the only people that know about these. Nexgen didn't make up these lines and say, boy, I sure hope they work. These are a direct reflection of thousands of calculations showing you precisely where the market may stop and bounce. And each and every one of these squares that I'm drawing on the chart is an opportunity for you to not get caught in a range. It's an opportunity for you to not get caught in chop, guys. It's FOMC day, and they don't know what the hell they want to do. Rule number 2 is keeping you out of that mess. Does everybody see it? These lines were there. The market gets to them, and the trigger count works, guys. The easy trades come from the potential. The easy trades come from the clear path. The easiest trades that you will ever take. Hold on, let me find my picture. Got to get my easy picture here, right? This is your easy button. Trading away from Fibonacci resistance, having that momentum, and trading to Fibonacci support, or trading from Fibonacci support with momentum to Fibonacci resistance, guys. The easiest trades come in between areas with momentum, and if you look at your chart and you don't have any room, it's okay to do nothing, guys. It's all right to sit on your hands, because the recipe for a trade, let's go back to it, is momentum, clear path, and entry. And if you give me a couple weeks to really focus on these concepts, what happens is every time you look at your charts, you can say, I have momentum, my path is clear, my entry is definable, and we'll go over the entry, guys. This is a high probability trade. This is a trade when each indicator on every chart agrees with the rules for the trades. This is the best of the best. This is a look that typically wins and gives the potential to win 70 to 80% of the time. If you look at your large chart and you say to yourself, I don't have momentum, but I do have a clear path at an entry area, or maybe I have momentum, but I don't have a clear path, it's only that potential, I can define an entry area. 2 out of 3 of those advantages puts you in a medium probability scenario, which means that most of your indicators agree with the rules for the trade. However, a small issue exists. That issue is going to be identifiable through your chart read. You're now medium probability. You may have to manage a little more assertively. If you look at a chart, and this would be an outstanding example, I don't have momentum, and we'll just put the recipe up there. Watch, this is how you should look at your chart every time. On the first bar, I do not have the advantage of momentum because there is no separation between the small and large. I do not have a clear path because Fibonacci support was reached. There's going to be this point in your life where you can look and you can say 66% of my advantages are missing. This is low probability. I don't want this trade. This is not my trade. This is not my highest chance of success. And it would be easy to lose a trade without momentum and clear path. And it would be easy to trade directly into a termination condition, hoping it breaks, only to find that it reverses over and over and over. And each of these losses are avoidable losses, guys. And the difference between successful traders and those struggling is typically how much money you're losing when you shouldn't be in the market. Stay patient. You're in control of the entry. Nobody can make you get into the market. Nobody can make you pull the trigger. And when you know what's working for you and against you, ladies and gentlemen, you can make decisions, not only on entering, but also how aggressive you're going to manage that trade. So the idea of momentum, can you guys give me a why, please, in the room, is going to be separation between the small and the large. That gap, all the colors match, guys. This is a look that says the market, the odds are favorable for it to continue. Guys, I love this look. I get excited about this look. This is the opposite. This is weakness. This is no good. This is anything can happen. I don't want to risk my money on anything can happen. And then once we get to areas, guys, we're going to count triggers. Price reaches support. How many triggers? 0? Gads, I don't want to take that trade. 3 triggers? I can't wait to take that trade if everything's right. 4 triggers? Load the cannons. We're going for it. So, guys, that's your very basic, that's your very core, that's what we're going to talk about all day long. And here's the thing that's going to bum you guys out. 90% of our day will be spent doing nothing. And guys, it is crude oil inventories day. It is FOMC day. Even crude oil is reacting to Fibonacci support and resistance, creating challenges. And we're going to have to wait. We're going to have to be patient. FOMC days are my golf days. I'm not even going to lie. FOMC days are when I decide I would rather go golf. All right, but when I have momentum, when I have a clear path on this NinjaTrader chart, guys, I'm going to go to my smaller, faster chart, and I'm going to look for areas inside of triggers. Rule number 3 says, I'm bouncing all over the place with my pictures here. Rule number 3 says that I'm going to use a limit order, which means that I literally get to wait for the market to come to me. I'm going to use a limit order, and I'm going to buy or sell a pullback. Now, a pullback is a small retracement counter to the underlying trend. A pullback is the small crowd fight. And I'm going to use a limit order to buy or sell a pullback, and I'm going to do it at an area, at a fib, at a mid-band, at a yellow 1-to-1, because the same way on your large chart, these areas can stop forward progress. On a small chart, they can stop that little pullback, that little fight by the small crowd. But here's the key, and this is where the accuracy comes in. I need that area to be inside of triggers, guys. Your small chart has 2 sets of triggers. It has the large triggers, they're smooth, and it has those stepped large triggers. These are called synthetics. And all they are, let's see if we can look at a live market and do the circles. All those synthetic triggers are the large triggers from the large chart. That's all it is. And we use these because price returns to large triggers. And you can see it. Price accelerates and returns to large triggers. And it breaks away and it returns to large triggers. And it gets loose and it returns to large triggers. And this happens on both time frames. So when we're looking for entries, we want to buy or sell a pullback at an area, fibs, mid-bands, yellow 1-to-1s, inside of triggers. And the tighter those triggers are, one on top of each other, the smaller the retracement zone is, because triggers define where the retracement, where the fight, where the pullback is most likely to go. Areas define where it's most likely to bounce. So you're going to be able to go through and define entry with a simple recipe. Let's just get rid of that and let's pull up a good one. When the large chart rules are met, and that's the key part of it. When the large chart rules are met, you're going to use a reversal bar knowing that it signals a pullback. So your small chart will be going up with the large chart. Your small chart will probably have momentum like the large chart. Your fear of missing out is going to kick in full tilt boogie. I can't believe they're going without me. And then the fight starts, the reversal bar. And this reversal bar says, okay, the fight is on. Here comes your pullback. Trigger lines, large and synthetic, define where those down bars are most likely to go down to. Trigger lines are not your entry. Trigger lines are not very bouncy. Areas inside of that retracement zone, fibs, midbands, yellow 1-to-1s, guys, these are the areas most likely to create a bounce and continuation with the direction of the large chart. So I have a midband closest to the reversal bar. This will be my highest point of support. I have yellow 1-to-1s a little bit below it. And then I have a blue Fibonacci line. But this Fibonacci line is not inside of triggers. This is not a part of my equation. My area for continuation, my area for entry comes from the highest point of support to the lowest point of support. And it creates a window. I like to call it the window of opportunity, because what I know through this pattern is that when the market is going up with the large crowd and the small crowd fights, I can define precisely where that small crowd is most likely to push to, the very bottom of those triggers. And they may bounce and continue with the market from one of those areas inside. I don't know which one it's going to be, but because of the large chart momentum and clear path, my entry comes from the highest point. I will activate a limit order 2 ticks above that highest point of support, and if they come and get me, guys, I am in a long trade with every advantage I could ever hope for. In a downtrend, reversal bar begins the pullback. Trigger lines define where the pullback is most likely to go. Areas within those trigger lines define where it's most likely to bounce. Any line beyond the triggers, guys, any line above the triggers in a short trade, any line below the triggers in a long trade. This is where the market should not go. This is where the advantage of rule number 3 is no longer in place. And guys, you're going to use that spot for stops initially to say to the market, I have all these advantages. Life is good. I have everything I need to be successful with this trade. You're going to have to come get me if you want my money. And guys, there's a lot of confidence that comes through studying this methodology and getting comfortable with it. So there's a path, and I'm talking to each and every person in this room that's new. Learning the trigger line of Fibonacci rules for when it's okay to trade. That's my job, is to teach you how to read these indicators. Your job is going to be to ask a question if you're not sure about something. Man, you talked about momentum, Mark. I'm just not sure about it. Let's look at it again. Let's go back and find examples. Let's make sure that momentum is drilled into your brain. So asking questions, learning these rules, this is the first step. Everybody in the room has the ability to simulate and to practice, and it's just going to the batting cages, guys. It is a victimless, consequence-free environment for you to practice these rules. So simulate your trades daily, guys, and post pictures in the room. Hey, Mark, this is what I saw in regards to momentum. This is how I felt about termination conditions. This is where I entered, and this is how I exited. Give me a private session and tell me if I did it right. Tell me if I read my indicators right. Tell me if my entry made sense. Was my stop in the right place? Was there opportunity for more money? Every time you post in my room, guys, and that's the first step in becoming a confident trader, you're going to get my undivided attention, and you're going to get feedback on everything that you do. And I'm going to put Hunter on the spot here. Hunter said, Mark, check it out. I have strong triggers, and I have the potential to break, and there was no divergence on my pullback right to Fibonacci support inside of triggers. I was able to make $100, and when divergence printed, I exited my trade because I know that kills the potential to break. Hunter, this is perfect execution of a very simple plan. And what Hunter's going to do is Hunter's going to take that feedback, I hope, and he's going to run it to his trade tracking sheet. And Hunter's going to say, okay, I posted in the room. That was a little daunting. I wasn't sure if my read was right, and I was a little nervous, but I had to put it out there because I want to be a professional day trader. And he's going to take that trade, and he's going to go to his trade tracking sheet. And I'm going to give this to you guys right now. And he's going to drop that picture in there. And he's going to talk about his advantages. And when he goes to the feedback from class section, Hunter's feedback is, this is perfect. All the way from entry to management, this is something that belongs in your plan. So he's going to go to his plan, and he's going to put that picture in there, and he's going to say, all right, I'm building a database of my pattern, and my pattern is momentum, path, and entry. This is what it looks like when my rules are true. And in the beginning, Hunter studied everybody else's pictures. Guys, I've been stealing these for years from you guys. There's that pattern from Nexgen clients, over 500 examples. Go start looking at the similarities. There's your entry sequences. There's ideas on management, guys. This spreadsheet also has the very basic rules. So if you're learning those core advantages, there's your strong triggers. It is exactly what they look like, and it's also annotated. This is where my highest chance of success comes from, when those triggers are wide. And if I go to another picture, labeled strong, strong triggers, momentum, rule number 1, and I'm burning this look into my brain because I never want to trade without that advantage. So there is a path to getting to where you want to be, guys. Learn the rules, post in the room, keep it simple. And in an effort to help you keep it simple, I'm going to give you the KISS plan, guys. And this KISS plan is designed to optimize your chances of success. This is your roadmap until you can create your own roadmap. This is your stepping stone until you can write your own plan, guys. This plan has been proven to win more than it loses. It creates confidence from the success, and you will create your own plan through simulation study, class feedback, and continuous practice. It gives a checklist for entering the best of the best trade. It gives a way to manage that very same trade. It even gives you entry checklists for that potential to break trade. Everything that you need to be successful with the software is laid in front of you from day one. The only thing I can't give you is the desire to do the work that it takes to understand it, guys. It's not hard work. It's fun work. You're learning something new. It's exciting, but you will need to learn these looks. You will need to recognize this pattern, and this is what's going to bring you success. So I'm going to be very, very transparent with you. Your first day is going to feel like drinking from a fire hose. Your second day is going to feel like drinking from a fire hose. On your third day, you're going to say, hey, when he says triggers, I know what he's talking about. Your third day, when he says areas, I know it's a horizontal line on my chart. By your fourth or fifth day, you're probably going to start piecing it together and seeing trades. Guys, the idea of being new with this software is not to be a professional day trader on day 1, day 2, day 3, but rather to learn the language, to recognize that it does in fact work, to see people in this room finding success with it and understanding that I'm going to walk with you every step of the journey until you find your own success. Welcome to Nexgen. This is what we do each and every day. Normally, we're going to spend a lot of time in the live market, and we're going to say, okay, if I have momentum, which I do, it's at the very beginning of the momentum, and if I have a clear path, which I do not, price reached a horizontal line, all my triggers are below, we'll look for an entry. But I don't have it yet. So guys, there's nothing for me to do. Whoops, there is trading view. We're not ready for that yet. We're going to get that in just a second. Accidentally went to my untitled workspace. In the S&P, termination for the win again. I do have momentum. Can you guys give me a Y if you see it? The smalls are below the large. The separation is there. Guys, this is a market that's telling me loud the odds are favorable for it to continue down. If it weren't for that damn termination condition. Price reached Fibonacci support. Price reached yellow 1-to-1s. My triggers have not made it through, and guys, look what the market is doing on that smaller, faster chart. It is already creating a bounce in the wrong direction that I'm hoping that it goes. So in this situation, my trigger lines have to get through that area. Guys, when we look at the live market, if the rules are met from my KISS plan, if I can use this checklist for an entry, I'll pull the trigger live. I'm not telling you when to enter, but I'm going to show you what it looks like to take the trade. I will manage that trade based on the KISS plan as well so that you can see it in action. Some days we get 2 or 3, some days we don't get any. But guys, look at that Fibonacci support holding. That's an avoidable loss. Fabulous question. If everything's lined up, we just wait for the black wick? Pibby's great question. We don't even have to wait for the black wick. I love that question. I like where your head's at. You want to see something cool? Boom, 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 boom. We'll use this one right here. I think this is the one that Hunter took. You see that black wick that I just put a circle around the bottom, Pibbies? Let's go to the smaller, faster chart and see what it looks like. Almost there, almost there. You know what? Let's go up a wick just because it's a better picture. So the top of that move, Pibbies, is when I've made the decision, 2 triggers are through, I've got all the momentum I need, let me go to the smaller, faster chart. There's your reversal bar. There's your trigger lines. There's your areas inside of triggers. So Pibby, we're going to call our shots. The market will be trading sky high. Let me show you on a better picture. This is how you can study this, guys. This is how you can prove it. This is how you can create confidence in it. And let me show you why we use a smaller, faster chart for entry. When the rules are met on the large chart, the market is right here at 97.05. In Pibbies, this is probably going to bum you out, man. Don't let it. You have 8 ticks to get to trouble, but you haven't reached it yet. And this is where we all say, dag nabbit, carn sarn it, I don't have enough room to make any money. And then that magical reversal bar prints. That's the top of the bar. And you go through that process. Now that the reversal bar is printed, where is the market most likely to retrace? Somewhere from the top to the bottom of those triggers. Where's that market most likely to bounce? Somewhere from the highest point of support to the lowest point of support. And Pibby, you're going to activate a limit order, couple ticks above, and you're going to put your stop 4 or 5 ticks below those trigger lines where the market shouldn't go. And now magically, because you waited for the pullback and took the best entry, you've got about $320 worth of profit potential to get back to trouble instead of the 8. We don't trade the wicks. If you wait for the wick, the market is gone. We trade pullbacks at areas inside of triggers, and it's literally predicting where that wick is most likely to form. Pretty cool, right? And the greatest thing is all it is a pattern. It's repeatable. The market does the same darn thing every day. I'm just going to circle wicks. Didn't quite get it there. Maybe not my trade. I believe some of you took this one yesterday. Circle it. Holy smokes, right to the area inside of triggers. So what we're doing is we're trading patterns, guys. Is anyone old enough to remember the 80s in here? I know most of you are just youngins, wet behind the ears. Pibby, are you old enough to remember the 80s? B, are you old enough to remember the 80s? Good morning, Crowbar. Do you guys remember when you could play Pac-Man for hours on 1/4 because you learned the pattern that kept you from getting eaten? Do you remember when you could play Galaga and make them stop shooting if you just followed a pattern? You could play Defender all day long. You could play that stupid game Bubbles until the cows came home. And all it was, Robotron, yep. And all it was that one pattern. That one pattern that brought you success. You guys know what I'm talking about. So B and Crowbar and Pibbies and anyone else in my room that's new. Shadow Picks. What we're doing right now is we're focusing on one pattern. And from this pattern, you're going to be able to read your indicators. And from that chart read, boom, 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 going full circle, guys, you're going to know what's good, what's bad, and how you need to manage it. And from that one beautiful trade springs all the other trades, springs momentum trades and high volume area trades and momentum trades and jump in the fudge in trades because you've got so many advantages. So guys, that's your Ninja Trader. That is what you're working towards on Ninja Trader. And once again, can you guys give me a why if you see that there's just not anything to do right now? I don't have momentum. I don't have a clear path. Any trade you take, guys, is smoking hopium. Any trade you take is the market. It's you wishing the market would do what the indicators say it won't. That's all it is. Whoa, now we're starting to break out, guys. Now we're getting 2 triggers above. We're above all the fibs. The momentum is beautiful. Uh-oh, are we going to get one? If I get a reversal bar, it's going to retrace somewhere between these triggers most likely. I've got one area inside of those trigger lines. Ladies and gentlemen, this area is the most likely spot for a bounce. So let's walk through it, and I want you guys to see this. Every time I look at my chart and I think about taking a trade, I go back to 3 things. So give me a Y if you see the momentum, smalls above the large, space between the 2. Give me a Y if you see that 2 triggers are through, but 2 triggers are not, which means that my path isn't clear. Ladies and gentlemen, it has the potential to break. Now, if it only has the potential, my job as a prudent trader is to be hell-bent on having a clearly defined entry area, which I do, but also not sacrificing any of that momentum, guys. And momentum is visually lost with divergence. So this particular trade in the moment has the potential for divergence. If that divergence becomes true, if a magenta line prints off of the top of this pivot on a reversal bar, guys, I have to cancel my order because divergence is the #1 killer of areas that only have the potential to break. No divergence. Divergence, no trade. If divergence prints, exit the trade. This plan is designed to optimize your chances of success. We will take this trade together as a classroom if divergence doesn't print because it fits the recipe. So Pibby, momentum leads the way. And then we count triggers. Anytime I see an area, any horizontal line, in this case, it happens to be a divergence high. Divergence lets me know there is a loss of momentum. And until they get above it, it's not a clear path. So I've got momentum and the potential to break. I have an area inside of triggers. This is where the market's most likely to bounce. If divergence prints, if I get that pink line, guys, can you hear me? Give me a Y if you can hear me, please. Cool. If I get that magenta line from the top of this pivot, Pibbies, it means that I'm losing momentum. And if I'm losing momentum, this is my small chart telling me that I may not have what I need to break that line. Does that make sense? So my plan, the plan that I give you guys every day, says no divergence on the 5-1. This negative number flashing and changing lets me know the potential is there. I'll know whether or not that potential is true about 2 bars down. So if it becomes true, I'll cancel my order. If it's not true, if I don't have divergence, we'll leave that order in. If I get an entry at an area inside of triggers, then my stop will be 4 or 5 ticks below that trigger. This is in the plan that we give you. It's happening live. I'm going to tell you guys right now, when the market has been consolidating, if we get a trade, it's either going to run like a scalded dog or it's going to die quickly. So we'll see what happens. And now we're just waiting. I've done everything I can do. Pibbies, did that help? First, it's momentum. Then we count triggers at areas. And then we define entry. If divergence prints, I'm obligated by my plan to not take this trade. If divergence does not print, I am obligated by my plan to take this trade. That's it. Those are my only options. Rules met, rules not met. If it never makes it down to my entry, well then it's just not my money. Does that make sense? B, first it's momentum, then we count triggers, then we define entry. Guys, you have a checklist that will literally talk you through. So divergence, John, is a loss of momentum. 1-to-1s are an area. So let's go back to this picture. John, do you remember where termination conditions are defined? Let me get to this one. 2 charts. Rule 1, momentum is always large chart. Rule 2, terminations is always large chart. This is giving us the big picture, John. On a smaller, faster chart, this is just a speed bump. It's like a pothole. This could, whoop, there's divergence. I have to cancel. This could create the bounce that I need to get back to my entry. So when we talk about these two charts, let's do it again. Let me get my tail picture real quick. Do I have it over here? Nope. Let me show you some cool stuff, John. I'm almost there. Got to get back to my pictures. We'll use this one. Actually, I'm going to do two pictures. So, and this is an important lesson for everybody, guys. Momentum is defined on a large chart because when the large crowd is making it scream north, it's hard to stop. Termination conditions are defined on a large chart because we want to know where the large chart is reacting. Pibby, go fix a sandwich. Go refill your coffee. Go run a lap with your dog. We had 9:45 news. Look at that. Divergence killed the trade, guys. So at 9:45, what was the news at 9:45? It could create a big spike. It could create a change in direction that didn't fit the pattern. It could create a run that lasts for 2 to 3 minutes that's just too fast to be tradable, Pibbies. So the general consensus is when news, and we didn't have any 9:45. I'm not sure where that came from, Morgan. It's Wednesday. We'll look at it at 10 a.m. and see what happens. But my rule of thumb is stay the, well, Morgan, we're not in Canada, brother. We're in America. America, dang it. Dag nabbit. Sarn it. Dude, we are guns and apple pie. Morgan, there is a filter right up top here where you can make sure that you're looking at U.S. news. Because the U.S. news is what messes up the U.S. markets and creates the emotion. America. That was funny. No, I don't care what they're doing in Canada. No offense, Canadians. No offense, Canadians. So check it out. Divergence pushed you well below that stop, right? Avoidable loss. And it still may go up. It's just not my money. Just not my money. So NinjaTrader users, and let me go back to the question. Momentum is defined on a large chart. Termination conditions are defined on a small chart. Guys, termination conditions are defined on a large chart. Forgive me. Your small chart is an entry chart. Your small chart is a tiny little something something in the big picture. And when you look at your big chart, everything is beautiful. And your small chart may have divergence. And your small chart may get the triggers against it. And your small chart might even have one-to-ones. And all of those small chart things that you're looking at are just what we need to get that push back to our great entry. Does that make sense, John? Let the large chart tell you it's time to look for a trade. Don't let the small chart scare you out of it. And guys, the only time on a small chart, let me go to the instructions real quick. The only time, whoops, that's not what I wanted. I will let the small chart talk me out of the perfect trade. If I go to termination conditions, big chart is very difficult to see change on. The big chart's a slow moving chart. The big chart is a man, molasses in January chart. Your small chart will show change you can't see on your large chart. So John and Shadow Picks and Pibby and B and Hunter and everybody, even you TradingView guys, 3 divergences in the same price range may terminate a trend. You'll notice that Nexgen says may, might, could, perhaps, has potential. We never know what the market's going to do. but my advantage of a clear path is gone with 3 divergences. It becomes more powerful with weak triggers. That rule number 1 lesson. More powerful still if the final pivot is higher than the previous from a low or lower than the previous from a high. So all of you new users, those one-to-ones don't faze me. For all you new users, unless it's a medium probability potential to break trade, divergence doesn't scare me. But do you guys see what the market's doing? 1 divergence, ugly, blah, might kill the trade. 2 divergences, it just keeps getting worse. None of you had to be in that trade. None of you had to take that loss. None of you had to go through that stress if you just learn the simple plan first. You will create a plan based on your ability reading the indicators. Guys, that is NinjaTrader 101. I went a little longer on it today because I know I've got you new guys in here, and it's important to me that you realize that you'll never be able to predict the market in terms of whether a trade wins or loses, but you can say without a doubt that you have an edge. I have an advantage. I have a pattern that I can prove wins more than it loses. How'd we do, guys? That's our first hour. B, you're on day 4 now? Is the language starting to click a little bit? Shadow picks, is the language starting to come together a little bit? Pibby, is this day 1 for you? Pibbies? Plural, there's more than one Pibby in this room. And guys, the idea is that repetition creates recognition, that the more times you see it, the more times you hear it, and so importantly, the more times you do it, and just ask for a little feedback on what you do, every day gets a little bit better, guys. Every day gets a little clearer. Every day becomes an opportunity to do it just a little bit more. I got a picture sent to me this morning. How do I open it? There we go. I just want you guys to see that. Kaizen. Focus on small improvements every day. You don't have to do everything at once. Aim for steady progress. Kaizen is the way I live my life in this room, guys. Small incremental change yielding big results. And B, it's okay to feel a little overwhelmed. Crowbar, I got so into that one, I actually tattooed it on myself. So learn momentum first, right? I don't have it. I don't have it. Learn momentum first. I do have it. And then once you learn momentum, take a little time to learn termination conditions. You learn that when you're getting your green belt in Six Sigma? Right on. My wife has talked about taking that one. And guys, FOMC days are garbage most of the time. The market consolidates, waiting for those announcements. The same is true with crude oil inventories, guys. The market is consolidating, waiting. There we go. I let a buddy of mine that I used to work with in the shop do that one on me. There's my Kaizen tattoo. Never mind the hairy legs. I love that philosophy, guys. There won't always be a trade, but the next one is coming. And when you go through the simple process, when you focus on the basics, what you realize is that some days aren't the best days. But there's an overall consensus that there's a lot of opportunity in the market. There's a lot of opportunity in the market when you understand some very basic concepts. And Pibby, I'm still floored at how accurate John Novak's indicators are. How much carnage could you avoid with 3 simple rules here? Pretty amazing, right? Pretty amazing. 30 minutes, Victor. If your rules are met, take the trade. If your rules aren't met, don't take the trade. That's the easiest way to do it. Let's go to TradingView real quick. Guys, there's another platform that we talk about, right? And it's showing a range too, right in between areas. Do you guys see that? Can't go up, can't go down. Triggers don't agree. NASDAQ stinks. Can't go up, can't break down. Trigger lines don't agree. S&P is a cluster fudge. Crude oil, there's your strong triggers. Right into the outer band, right into divergence, guys. caught in a range. It's not always sunshines and rainbows and unicorns, guys. Some days it's doing a whole lot of nothing. I had one trade this morning. That was it. One trade this morning. It didn't work because I didn't know. You need to see what, Pibbies? You need me to magically make rules met so you can see me trade? Guys, watching me isn't going to do anything for you. I'll always do it if I can find rules met. And check it out, Pibbies. You did see it. We said because of that pink line, this was more likely to fail than win. Pibby, do you see it failing right now? So what you're doing is you're realizing that the rules might have something to them. The rules are going to be your lifeline. The rules are going to be the reason that you enter a trade, because when the rules are met, you have an edge. These wicks, Pibby, are useless if the rules aren't met. Does that make... That's the one thing I want you to get. But look, there's the bottom of the move right there. It's still at support inside of triggers. I don't have any rules met at this wick, right? How could I? It's at the very top. So if there's a wick, momentum and path, that's it. And the thing is you can go back 10 days. You can tighten this up, and you can look for that momentum, that potential to break. Circle a tail. Do some study when you can't find a trade. Look at that strong trending market, right? Straight from Fibonacci support. Opportunity, opportunity, opportunity. A lot of you guys showed me a bunch of winners there. Opportunity here, right? So sometimes it's outstanding, and sometimes it's sit on your hands and do nothing. Shadow picks. Learning and understanding the different lines meanings helps tremendously. Understand what's being discussed. I love it. That's how it works, shadow picks. You guys start off. I started off. For those of you who don't know, because it's FOMC and we don't have rules met, I'm gonna do a quick little trading view indicator something for you. Guys, trading view has the same thing that I give you on Ninja Trader. There's going to be a spreadsheet that talks about rules. There's going to be the spreadsheet that shows you what it looks like to have your rules met. That's your pattern. Ideas on management, ideas on terminations, when not to trade, and a place to track, guys. Everything you need is there. TradingView has a plan as well, telling you exactly what your big chart does and how to use it, telling you exactly how the 1 minute works and how to use it, telling you precisely where entries can be taken from, and then checklists for entries, guys. Nexgen has done the work. We've taken the pictures. We've lost the trades on simulator. We've recognized the patterns, and we vocalized them so that you guys can follow them. Now it's just a matter of rinse and repeat. Now it's a matter of see the same thing, do the same thing, learn to believe in the same thing, so that you can find the advantages. And it's overwhelming. And shadow picks, this was the picture that I used to always put in the room. Where did it go? Where's my picture? Any one of these, but that's the one I've been using for years. When you start off, there's a lot coming at you, guys. My goal is to break the whole into pieces, to break 3 rules down individually so that you can ultimately piece them together to create a trade. To break, well, let me get the plan. Hold on. I'm opening a lot of stuff. To break 3 rules down individually to create a trade. And then from that plan, there's a gentleman in this room that actually created a trade that a lot of you guys use. And he used to say that this high probability trend trade probably isn't your get rich trade. This high probability trend trade is going to make it so that you can see your get rich trade. So now we're going to go into the second half of class, guys. We've talked a lot about the looks. We're recognizing that we can't seem to get rules met. And now I'm going to go back and I'm going to start clicking on the pictures that you guys have posted in the room. I'm going to focus on not the wins and losses because I can't say this in a loud enough voice. Your wins and losses have absolutely no bearing on me. Your wins and losses don't affect my quality of life. Your wins and losses really don't do much for me beyond giving me the opportunity to look at your chart. So every time I look at a chart, guys, because this is an educational room, we're going to talk about momentum, we're going to talk about path, and we're going to look at entries. And I'm going to relate everything to the KISS plan for my new users so that you can see those advantages or disadvantages on a chart. If I tell you you got lucky, don't get your feelings hurt. It means that you broke some rules, that you had ridiculous holds, right? That your stops don't really make sense, that you're ignoring the information on the chart. Because when you get lucky, it sets you up for long-term failure, guys. When you get lucky and make a couple bucks on a trade that shouldn't have ever won, and I'm telling you, horrible trades win, great trades fail. It's the consistency of having an edge that we're going to talk about. So we're going to get going here. I've got 4 in a row. I love it when you guys post multiples. And we're going to take a look and we're going to see what's going on. And guys, I'm going to talk about it from a very basic standpoint. Was there momentum? What did your path say? Let's define your entry. And then I'm going to talk about it from a chart reading standpoint. Because a lot of times you're going to see the more experienced users, and Pete's one of them, taking trades that don't seem to fit the rules. Well, they fit Pete's rules because Pete has done the study, because Pete recognizes momentum in a clear path in an entry, because Pete knows what he's up against, and he's begun to recognize patterns outside of the basic patterns that can create a little bit of success for him. So, Pete is coming from a termination that reversed the market. We call that a strong bottom. That's a good indicator. Pete has all the momentum in the world, and he's actually got a clear path. The one thing Pete doesn't have is an area inside of triggers, guys, and I want you to see this. If we go back to the core, to the basic, whether you are TradingView or NinjaTrader, if you go back to the idea that when momentum is present, that when the path is clear, you're going to find a way. Newer users, give me a Y if you can see, here's my trigger lines, right? I don't have any areas. I have to say to myself, I can't define where the market is most likely to continue. And once I get to the wrong side of the triggers, I want you guys to believe this. I don't know if it's going to be this line, or that line, or this line, or that line, or this line, or that line, or these lines all the way down here. So Pete says, my large chart is perfect. My large chart is perfection. My large chart is everything that I could ever hope for looking for a trade. I don't have a clearly defined entry. I can't put a stop 4 to 5 ticks beyond the triggers because, goodness gracious, I'm below the triggers. So Pete says, give me a bar from an area that could create a bounce. Give me a confirmation bar. Give me a reversal bar in the direction of the trade. Give me some indication that the large crowd is back in control. And that's exactly what he did. When the bar prints, Pete takes an entry. He's able to put his stop below that bar and say, because of the large chart advantages, the expectation is that it continues up, and Pete's able to capitalize. And guys, this is you saying, my entry isn't perfect. Let me force the market to go in the direction of my trade. That's what we call a confirmation bar. Pete, nice job. Large chart was perfect. Small chart was not. Pete finds a way. Next picture. All the momentum we could ever hope for. Absolutely none of the clear path. Do you guys see it? Price reached Fibonacci support. None of the triggers broke. Pete says, I have momentum. Here we go again. Does it always go back to 3 things? Pete has momentum. Not even an illusion of a clear path because price reached the area, none of the triggers broke. Pete has a defined entry. Somewhere in here is where the market is most likely to bounce, areas inside of triggers. Stop has to go where the market shouldn't. Pete understands that. Pete says, I've got 2 out of 3. I'm willing to take the trade. I'm willing to suffer. And goodness gracious, 59, 29, nope, 39, $200 per contract on this trade of risk directly into an area that could stop the market. Some of you will say, there's no way I'm risking $800 into an area that could stop the market. Some of you will say, I believe in termination conditions. Why would I take a trade into that area? Some of you would say, well, Pete, that sounds like the recipe for financial suicide. Trading into areas that could stop the market. To which Pete replies, trade your plan. I made my decision, right? I'm not here to be the trade police. I'm here to point out that he put a stop where the market shouldn't go. And he makes money on this trade. Guys, that is a ridiculous amount of risk. I think, in my own personal trading plan, Pete accepts the risk. Pete's willing to lose $200 per contract directly into a termination, even after divergence prints, even after it fails once. So, Pete, I'm glad you got that trade. I'm glad it worked out for you. I feel like that's a trade that's going to lose more than it wins based on the study that I've done. So guys, you can make decisions. Your decisions may be different than somebody else's. The market is trending down. Everything is strong. Nothing in the way. Everything's below trouble. And Pete just jumps in. Strong trending market. Nothing in the way. Every indicator agrees. And he's able to get paid. I love it. Once you understand momentum and path, there's opportunity. Nicely done, Pete. Same thing on a trading view chart. Odds favorable momentum, absolutely nothing in the way. Pete just jumps in. Just jumps in. And rides through 57, 64. Rides through all of the retracement and says, I'm just going to see if the large chart wins today. And it goes down and it comes back and changes trend. And Pete says, nope. I'm going to put some faith in my large chart, and it pays dividends. Large chart leads the way, and that's a great example of it, guys. When you've got strong triggers and nothing in the way, that market's more likely to go down than up. Pete, great chart reading, nice trades, little bit of adrenaline in there. Nicely done. Thank you for sharing. I like it. All right. Steve Diego, one from yesterday, one from today. Let's see what Steve Diego's doing. Let's blow this up. Strong trending market. Guys, when you see people in the room talk about strong railroad tracks, he's had 30 bars in the same direction, no reversal bars. We define a strong trending market like that, 30 plus bars without a reversal bar. And you'll see your small triggers ride the large triggers. Now this reversal bar ended your strong trending market. Let's see where the entry is. At 11:18, at 11:18, Steve, you took the trend trade. Your areas are outside of the trigger lines. You had enormous risk, too much risk after double bottom on 2 1-minute candles, but you held it anyway and you got paid. In at 59, the market drops $300 against you from the wrong side of the triggers. You rode it out anyway, and you got paid. So there's a point where you ask yourself, is that my best chance of success, right? Guys, it's okay to take losers. It's okay to take small losers, especially when you take the perfect trades. Odds favorable momentum, pull back to the area inside of triggers, easy money. Jump in trade. When it failed, it turned into the trend trade. Down it goes. Let's read it. Bad trade management. Price hit the target, didn't fill, did not fill immediately, hit exit button, and price went up to 1-to-1s. Came back down to within a tick from target once again. There you go. Could have held, but the dog had to go out. Man, we've all taken that trade. Nice trading, Steve. This one, maybe a little aggressive on risk management. Guys, odds favorable momentum. Jump in, jump out. Nothing in the way till 1-to-1s. He's out at trouble. You're going to see this a lot, guys. This is a trade that they call the chili dog. This was developed by a Nexgen user. And all it is when the momentum is there, the path is clear, jump in, make $100, jump out. Nice trading, Steve. Pete, going short, I'm assuming. I don't know where you did it. Strong triggers up. Coming off of resistance. Small chart rolled. Odds favorable, momentum, nothing in the way, and you take it down to support. I love it. Pete, believing termination conditions can stop the market. Grabbing a little snippet with the momentum on the small chart. Nice read. Nice trade. And guys, this is the class. Rinse and repeat. Take a trade, post a trade. Read a chart. No momentum. Nowhere to go. No reason to get caught up in the shenanigans. Divergence, the #1 killer when it's only potential to break. And here's another amazing thing. All my trigger lines are above support. And guys, they still haven't been able to break below it. Do you see it? Trigger lines, 4 above resistance. It became support. And so far, they can't seem to get above it. Pretty neat, right? Guys, when the market's in full consolidation mode, I'm just going to go through charts. This is the perfect day for you guys to ask a million questions. This is the perfect day for you guys to say, Mark, let's talk about a concept. Mark, let's work on management. Absolutely no momentum. Absolutely no clear path. No reason to try to go long from a mid-band. Nice picture. Sometimes just taking pictures when the rules aren't met. Reaffirming that there's a lot of losers that you just don't have to take. Nobody can make you pull the trigger. Caleb, let's see what you're doing, my friend. Ah, Caleb says, check it out, Mark. I'm not going to tell you why, but I've got momentum, and I'm directly into a termination condition. I've got an entry area, but I'm directly into a termination condition. Hold on. Caleb, I was wondering if somebody took this. Are you with me, Caleb? I don't have a clear path, right? So Caleb, let's check it out. You had momentum, rock solid. You had an easy to find entry area, rock solid. Let's talk about the difference between success and failure on this trade more often than not. Caleb, you had strong triggers. You had no divergence. Do you see that? You did not sacrifice any of that momentum to try to push you through that area. And nothing changed all the way up to your target. Caleb, this is an awesome trade. You knew what you were up against. Nothing changed from the time of entry. Make that money. Does that make sense, Caleb? Did you know that you were trading into a termination condition? That would be my question, because you didn't tell me. Did you know that there was a giant red stop sign for the new users? But from somebody that starts weighing these out, great opportunity. You didn't give up the other 2 advantages and you found a way to get paid. I love that. And then do you guys remember what happened when that divergence printed? Big difference. That's where all the nonsense started. Great job, Caleb. Awesome, awesome trade. Miss Jen, talk to me. What'd you do? Jen says, no clear path, all the momentum, no divergence, great entry, beautiful target, target. So Jen, you did the exact same thing we just discussed. Recognize that it's not your best, but because of the other advantages, chose to enter with a little confirmation, got paid quick, and then waited for something to change before you got out. Beautiful trade, Miss Jen. Guys, the KISS plan is your stepping stone. The KISS plan is the beginning. The KISS plan is what teaches you to make these decisions. 4 lots. 4 lots of goodness. Sample 3 divergences on the 5-1 chart did not stop the move. You're absolutely right. Victor, does it stop the move more often than it doesn't? That's what I ask. I like it when you guys take those pictures. There's 3 divergences, and it's pushing below the good stuff. There's 3 divergences. Big push down. See if we can find another example. There's 6 divergences. That's where the move up started. 1, 2, 3. Sure enough, it pushes higher. I love it. Guys, remember that trading is about what's likely to happen. What's the pattern that I can recognize that may push me past my great entry? What's the pattern that I can recognize that might make the market hit my stop instead of my target? 3 divergences is it. Great recognition, Victor. I like it. And what Victor did here, and I'm going to bring this up one more time. What Victor did is he said, may stop the market, might stop the market, could stop the market, has zero obligation to stop the market. Great job, Victor. Uh-oh, here comes John Novak. Let's see what John did. Coming from the termination condition, his small triggers have pointed down, his large triggers have pointed down, and price is below trouble. Do you guys see it? TradingView users, this is what I want you to see. When I'm looking at TradingView, I'm going to go through the setup real quick. Large chart leads the way. Have I mentioned that today? Large chart leads the way. Large chart tells you which direction the market is going. And guys, the market is going down. And then I ask myself, and you should ask yourself, what direction are my small triggers going? They're going down. Everything says short. But there's 3 locations that price will be in compared to these small triggers. If it is left of the small triggers, below the small triggers, guys, this is the strong side. I can't wait to take shorts with this look. If it's inside of the small triggers, this is kind of a transition. I'll still take short trades because I'm going with the trend, but I'm not going to fight anything on the small chart. I'm not going to trade against small chart triggers. And then from the weak side, I really want to see momentum in my favor. So John Novak went through the exact same process there. My smalls have pinched down, my large are down, my trend is down, I'm below trouble. Let me take a pullback to a midband. Let me enter that trade, and let's see if we can find a little bit of money on the way down in a trendy market that isn't trending. And it got stopped, got out 3rd time above 1-to-1s. That's a tough 300-ish. Great management is where money's made, guys. And great management is going to help you find something where nothing seems to be available. Boaz. No momentum. It's weak triggers, Boaz, right? Smalls inside of the large. Right at a termination condition. And you choose to enter on a pullback. Looking for confirmation. So Boaz, I'm not sure that you got it. It's not a 50-50 because 50-50 takes momentum. What you have here is weak triggers right in an area, and you're missing your synthetics on the smaller, faster chart, so I'm not sure what the pullback looked like. And this was this pullback. That wick, right? Doesn't fit any rules. So Boaz says, I'll just let everything go down with momentum so all of my indicators agree, and then I'll take that trade short. It's a beautiful trade. Large chart never set up. So Boaz waits for everything to agree again and finds a way to go down with a large chart. It's a nice trade. It's not the perfect trade, but it's a great chart read, and it's awesome patience. Nicely done, Boaz. And then John Novak, All right, I'm going to annotate John's charts because, believe it or not, we see things exactly the same. So every time I look at a large chart, I'm going to do exactly what John Novak did. It must be in the last name. My trend is down. My smalls are down. I'm strong side of the smalls. But, there are zones below me. Will I have room back to them? That's probably what he's thinking, right? So John says, okay, I'll take this pullback back to the HVA, back to the VWAP. I'll risk $160 because of the large chart. John Novak knows that we're not outside of this zone. And guys, I want to show you something. Tried and failed, 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 tried and failed. That's the first time we got any meat of a bar below the zone. This is what makes John take this. Nope. Guys, give me a Y if you can hear me. All right. Pibby, don't put a Y if you can't hear me, silly. So check and make sure that you're not muted. All right, so trading view people, do you see what I'm talking about? The trend is down. The smalls are down. He's the strong side of the smalls. This meat of a bar, finally below the area, lets John Novak know that he has a chance. And he's willing to take the trade. The challenge is, the trade comes inside of that area, not below the area. So he does not have a clear path. These zones have already held. These one-to-ones have held. This zone is held. The small triggers are up, and the large triggers are flat. This is a chart read that says, with trouble, top of the divergence line, top of the zone, VWAP, and an HVA, and smalls below the large, I'm willing to take a shot at this trade. Guys, it's a great look for the potential for more down. Risk that $100 every time. It was worth his money to take a shot. And that's exactly what he's doing. John says he doesn't look at these zones. And that's okay. John, I think the best lesson on this one, and this is just, I like sharing the things that I see. When the zone won't break, I force the entry from below it. But John Novak manages more assertively than I do. And that's not a lot of risk for a NASDAQ trade on 2 contracts. And if it goes, pretty outstanding. And guys, the market is just consolidating. It still isn't doing anything. Steve Diego says, since the markets now are like watching the corn grow in Iowa and oil inventories at 10:30, I don't want to be tempted to force trades on FOMC days, so we'll see everyone tomorrow. Steve, have a great one. Have a great one. 2.5 points is like virtually no risk on the NASDAQ at all. Whoops. But what I really wanted you guys to see is that John Novak approaches it logically. What does my bigger time frame say? What's happening on the large time frame? What do my triggers say? Am I below the trouble? Is there room to make money? Let me find an entry. And guys, that's the way trading is. When this says give it a shot, find your shot. Initially, your shot is going to be a momentum style HVA trade. Your shot is going to be a trend trade. Your shot is going to be an HVA trade coming from a zone that just held, right? Pibbies, are you back? Awesome. There will be great trades that fail. There will be amazing trades that fail. There will also be horrible trades that win. I didn't have that zone you had, John. Guys, it's just range. It's just range. That's all it is. Let it break. Let it break decisively, right? S&P tried to, and now we're right into trouble. Crude oil can't seem to get out of there, and now it's going sideways. Gold, the bottom dropped out right to a zone. That's a lot of movement, isn't it? If this says down, weak side from an area. So guys, rinse and repeat. All right, I'm going to leave you guys with crude oil. Inventories in 5 minutes. I'm going to go take 5 minutes. When I come back, guys, we're going to have an hour and a half with no charts posted in a range-bound market. Hopefully they break out. We get some rules met. But if they don't, this is the perfect opportunity for everybody in this room. Call at 9:30 correct the first time. When you say call at 9:30, are you talking about news? Oh, hey, John, have a good one. Still want to see charts from you, my friend. So, Pibby, I'm on Eastern time frame. So 10:30 a.m., crude oil inventories. That's going to be your news. I'm not sure what call at 9:30 is referring to. But that's what everyone's talking about is the news that's going to print in just a minute on crude oil. And we'll see what it does to the chart, guys. We'll see if it knocks it out, right? Leave it on gold versus crude. That is dead. Yeah, John, but we have inventories coming out in just a minute. So I want to see if there's a reaction. I want to see if there's a breakout. There's a reason, a method to my madness. I'll be back in just a minute, guys. Here we go. I guess news created a little spike, didn't it? News created a little jump, little bump, little giddy up, little something something. Paul, what'd you do? Paul says, check it out, Mark. This is the S&P. I have momentum. I have the potential to break. I have an area inside of triggers. So good luck, Paul. Little extra risk on it. It bounced. Do you guys see this? So this is what I want new users. Can everybody hear me? Shadow picks and pibbies and lost and B. Guys, this is what I want you to see. This is the most important thing that I think I could show you. And I want you to see this. Momentum first. Define your path. Let it be perfect. Can you guys give me a why? If you see that Paul bought the low tick at an area inside of triggers. First target was hit, and he's got no risk on the trade. This is what I want you guys to get out of this. If you're brand new, if you're in my room and you're like, man, does the software work? Does the pattern really repeat itself? The answer is you're damn right it does. Paul, can I let your secrets into the room real quick? I'm going to let you guys in on something. Paul, when he got the software, because he had a neighbor that used it, Paul was on Market Replay every day for like 6 months. And every day, Paul would show up in my classroom with 5 to 10 pictures, and we would discuss everything that he saw, everything that he did, every question that he had. Guys, he is absolutely killing it with the same pattern he learned 2 years ago. Simplicity takes you to the promised land. Shadow picks, you said that you took the entry right off the one-to-ones inside of triggers. It works, doesn't it, Shadow picks? It's a pattern. It's repeatable. It's provable. It's definable. All you have to do is learn the pattern. And it's still going. And guys, this fit the KISS plan beautifully. Check it out, Pibbies. Circle the tail. Boom. $900 Shadow picks. Who's your client advisor? They're going to call you for your credit card in just a second. It's time to commit. $17.40 for the day. What are you using for pictures? Let's see if I can help you with that. Cameron? Right on. Cameron's going to call you. But do you have Snagit? What are you using for pictures? Because, man, I want to be able to do this every day. And that's where picture taking and annotation. Do you own Snagit? Go to your search bar and type in Snagit. If you have it, it'll show up. If you don't, then we're going to have to get you something to catch, to be able to catch pictures with. Let's see how we can get you. Man, that's beautiful. Taking pictures. There's also a Microsoft snippet tool, Shadow. I don't have it, but someone was telling us about it yesterday, that there's a snipping tool that allows you to take pictures. Snippet good. So there's this one. It's these pictures in the room, how we get to have, for Mac it's screenshot. Thanks, Pablo. Well, ShadowPix doesn't have a Mac if he's using NinjaTrader. But it's the pictures how we have conversations. So guys, If you're struggling with pictures, get a way to take them. And then we'll get those pictures in the room. I'm going to open up the Webiverse real quick. Guys, if you go to the funding page, there should be a pop-up on there. And I wanted to share this with you guys. John Novak told me about it this morning. I thought it was pretty darn cool. Let me find that picture. Did you guys know that you can win a free $50,000 account? 5 winners picked monthly. Subscribe now for the newsletter if you haven't already. Great way for you guys that are getting into this. Tell your friends. Let's see what happens. Man, they knocked Crude loose, didn't they? But right to a termination. Isn't it awesome that even the psychosis of news stopped right at a blue fib? I love it. Let's see what the S&P does. Momentum first. 3 triggers through. Divergence and weak triggers. My plan says I'm not allowed to take that trade because divergence is the biggest killer of the potential to break. Oh, you have TechSmith. Okay. No worries. Is it Capture Shadow Picks or is it the Snagit? Snagit is TechSmith as well. It's the Capture. No worries. So it's very similar. Do you have it up in front of you? Let's talk about it. I don't have Capture anymore, Shadow Picks, but we can get you there. If you have it up and you click the big Capture button, it's going to give you the areas. So if you hover over one chart, it's only going to give you one chart's worth of information. So what you need to do to get both charts to present in the room is left-click your mouse in the upper left-hand corner of your charts and drag it down to the bottom right. Whether it's Snagit or Capture, they're the same company. And when you release, you're going to get the image preview. Up top, you're going to see arrow, you're going to see call out, and I believe you're going to see shape. Arrows, everything is click and drag. So on Capture, if I left click the screen when I mark the arrow, it'll let me put an arrow anywhere I want to put it. So you can draw it to momentum, right? If you do the shape, it's also click and drag. So left click, drag it, stretch it, wherever you need to put it. Maybe you want to put it around the area that's not broken yet. So first you click the icon to get you to arrow, and then you left click the picture, and that's when you do it. So it's click and drag. You have to hold the mouse down. And then it won't lock until you release the mouse. You also have the undo button. So try just mash your left mouse button and then just drag. And let me know if you get that, something comes up. I wish I could download Capture. When they stop doing it, let me see if I can get it downloaded on my computer real quick. Does anyone have a link to TechSmith Capture? Just pulls the screen, doesn't open. All right, let me figure out. I know they're not running support anymore. Let me see if I can download it. Sign up and download. I've already signed up. It's making me create a new account. I don't need that. I need to log in. LGJFGJ. Continue. Well, I don't want to tell you to spend your money because it's not mine to tell you, but yeah, I love Snagit. It's $39 a year, and they're not supporting Capture anymore. So they're not doing updates. They're not doing tech help. But Snagit is their baby. It's $39. And it has all the bells and whistles, and it works flawlessly. I'm going to try to get my capture up, though. I'm going to see if it'll load for me and if I can get it to, and then we can just go through it together, and at least that way, until you get Snagit, hopefully we can work this out together. Here we go. So now I've got capture, and we'll just do a snapshot. So I do the capture, click and drag, take the picture, and then it tells me to capture the picture. And now from up top, arrows, call out shapes. Is this what you're looking at right now, Shadow Pix? When you take the picture, you should have these up top. Call out, color, shape, highlight. So if I click the arrow, I should be able to left click. It doesn't give you that bar. Let's try and take another picture and let's see. Oh, and Chariot says you can do a free trial with Snagit. Let's try it one more time though. So just take a new picture. And from that picture, you're going to click capture an image. So until you capture an image, the bar won't be there. And then once you capture the image, you should see that image preview with the tools on it. Let me know if that works. While you're doing that, I'm going to see what Jen did. Jen said, check it out. 2 triggers through, no divergence, perfect entry, all the money, kiss targets. Great job, Jen. Morgan, didn't have the one-to-ones. Odds favorable, clear path. Took the entry. What happened here? You missed the perfect one. Let's see if it comes back up. Nicely done, Morgan. Did that work for you on the second one, Shadow Pix? Morgan's still in it. He got scared. Morgan probably got scared. Already hit your targets? Outstanding, Morgan. Nice job. Did you get a fresh picture, Shadow Pix? Guys, we're at the point in the day where we're just going to talk about what you want to talk about. I don't have any pictures to look at. When you get in at the best spot, your target is the reversal bar. Isn't that awesome? That you can make $100, Morgan, in the same bar that you entered? Because you are a freaking sniper, my friend. A sniper. You took 250 at the reversal bar. Really? Guys, are you listening to that? He entered at 17. Got out at 1950 at the reversal bar. That's beautiful. Nexgen says you're welcome, Morgan. Jen made 300 though. Like, I'm not trying to turn it into a competition between my kids, but Jen did it better. Just kidding. She caught a completely different trade. She didn't even catch your trade. She was done by the time you got in. Outstanding job. And then because we have those one-to-ones, Morgan, it's getting a little wonky, isn't it, because of divergence? And just right back into the range, guys. Virtual high five, Jen. All right. Hunter, are you only on crude oil? Are you going to branch out to the ES a little bit once you get comfortable? One of the things, guys, when you get comfortable with your patterns, like one market is plenty. But once you start to get comfortable with your patterns, you may be able to go back and forth between 2 markets. I've seen people look at 5 or 6 markets, and they just catch nothing, right? Uh-oh, it froze. Yikes. Let's look at TradingView a little bit. Let's go through... Man, John, I don't think that crude oil is holding holding much either, is doing much either, or gold. Um, I haven't pulled up 6E, which is the Euro futures. I was like, let's just see if patterns repeat everywhere, and they sure do. They sure do. Pull back to a mid band with the small triggers up, take a close on the correct side, make some money. Over and over. Pull back to the HVA, pull back to the mid band, the HVA, the zone, small triggers up. And it just keeps going up, guys. Over and over and over from the good side of those. I'm just looking. Jen, I'm just looking. You guys know the patterns work on everything, right? Look, this is XRP. We'll just open up one chart. This is XRP. Strong triggers and the XRP just went flying up. And then we start to weaken the triggers a little bit, right? And we get a big retracement right to the top of a zone. And that's where the bounce happens. Guys, this is crypto. Yeah, my wife is so excited about XRP. She's convinced it's going to be the next Bitcoin. So we've got like 5,000 of them. What's cool though is it's trading at 3, and we got in at like 40 cents. Most of it. That's where the journey started. All right, Pablo, let's see what you did, bud. Pablo says nothing in the way to the one-to-ones. Waited for the bounce off of divergence, which also happens to be the zone. So pulls back to the zone, and you get in at the zone because everything says up, and you get out at trouble because trouble can stop the market, and Pablo making lemonade from lemons. Nicely done. Look how far away your triggers are. Awesome. Shadow picks, you're just like, F it, I'm going to use my phone. That's one way to do it, brother. Or sister, I'm not sure. Right on. That's good, but you can't annotate it. But I like seeing it. So, do you know how to, and I don't know if you did or not, guys, on your small chart, one of the ways that you can get the best feedback is right-click and go to Data Series and make sure that your text and markers are on there so I can see where you entered and where you exited. The same way Pablo did me that favor. Pablo said, check it out, Mark. That's exactly where I entered at the price. That's exactly where I exited. And Pablo, that was from 10 to 24, I'm assuming. 14 points, $280. That's a nice trade, Pablo. Oh, 21. So, no, about $200. $215 in 2 minutes. All right, you're paying for golf today. We're not going to hang out on FOMC and try to trade news. Guys, crude oil is given a truckload of nothing. Divergence on the potential to break is messing things up. You bought the pullback above the one-to-one, 2 orders, major sell orders in a second. From right here? Or which one? In this picture? Hold on. I like it. We get the annotation. So you bought the pullback above the one-to-ones right here. Did you go long? Or did you go short? Or you got this short right here? See how I've got to do the point and hope? Were you in here? Were you in here? This one? So the large chart said down. I remember. Let's go to the actual market so we can piece it together for you. Large chart was screaming down. It was news. No, you're good, man. You're good. Don't you ever fret. Screaming down. News had just printed. Everything is screaming down. And you got in somewhere right around here. And with momentum on both charts, it goes right to the fib. So shadow picks, what you're learning right now, and the lesson that I hope everybody's getting from this right now, is that the high probability trend trade is not your only trade. You start recognizing trend. You start looking at momentum and you say to yourself, man, I'm going to find a way. I'm going to let momentum push me to that next target. I'm going to let momentum get me to where I need to be. And shadow picks, here's the $1 million question. Did you put your targets at an area that could stop the market? You're done, shadow picks. I can't do anything else for you. Great job, man. Great job. How long have you been with us? I know I've seen the name. I'm so stoked that you're participating. Guys, I'm telling you, the more you post in my room, we have these awesome conversations. We get to talk about everything, right? Monday, you were here a year ago? Right on. Strong triggers, strong side of the triggers. Does everybody see those one-to-ones? Does everybody see that zone right there? Do you guys know that zone could be problematic? There's no reason to trade directly into it. But with momentum, with price above it, maybe with an entry from the top of it, there's not a lot in the way till the outer band. You feel 2 to 3 weeks here would help everyone get successful? I agree, Shadow. I think that 2 to 3 weeks of study, 2 to 3 weeks of keeping it is easy. I believe anybody can do this. So let's ask this question, and shadow picks, and watch this. You were here about a year ago, you said? Shadow picks, am I saying the same darn thing I said a year ago? Is it the same class? It's the same thing, guys. It hasn't changed. The path to success hasn't changed. Learn your rules, practice your trades, simplify. So, Jen, what point is that pink one-to-one in terms of the bar clear of it? So, do you see where price is trading, Jen? See the top of the bar, the movement? Because it's a bigger, slower chart, Jen, I don't want to enter the market. I don't want my entry to be below those one-to-ones. That's the easiest way to look at it. So if I were looking to take a momentum trade, I have to get above it. I have to enter above it. And I have to use this zone. Right? So my stop loss would go right below that bar, right off the top of the zone, right off the top of the one-to-ones with the momentum. And I would look to take profits probably somewhere around an outer band. Because strong triggers, strong side of the small, I'm above trouble. I broke above that trouble and pulled right back to it. With strong triggers, I've got virtually no risk, 18 ticks. With momentum, with confirmation, right off the top. Does that make sense, Jen? So now it either goes up or it doesn't. But because of up, strong side, above trouble, break the area, pull back to the zone with strong triggers. Now it's just up to the people that control the market to push that thing up, right? And if they do, outstanding. And if they don't, who cares? 18 ticks. Bah, that is not a lot. Let me change ticks to cash because you guys talk in terms of cash. There we go. $180 risk to make $380 of the outer band. See how there's nothing in the way on the large chart, Jen? Guys, this is your momentum trade. I could reduce that down to 1. right? And if I wanted to, I could put a sell limit, 32, right at 36. There we go. Take half of my profits, go break even. It's only momentum. It only goes or it doesn't, right? It either goes or it does not. And now it's even better. I've got strong triggers. Now I have an HVA. I mean, my goodness. That's another momentum trade if it comes back to it. But with momentum and a clear path, it doesn't seem to be coming back, does it? So I'll cancel that order. I've got nothing to lose. I've got everything to win. That's not even an outer band. Let's get closer to an outer band, right? We've already made our $100. We're up 130. We've got absolutely nothing to lose in a market that says, let's go north. Does that make sense? Shannon, does that make sense? George, does that make sense? Crowbar. That is your momentum trade. Break an area, pull back to an area. Resistance becomes support. Odds favorable momentum. Guys, it just keeps getting sexier the further it goes up. And if it bounces back, I've got a zone. I've got an HVA. If it takes me out, who cares? There we go. I'm out. I made money. Let's wait for the next one. Right? Now my small triggers are down. It may push lower. I can't take that momentum trade. And if it gets back below these 1-to-1s, that's my no entry zone. But because the small triggers are down, they're still above the large. There we go. I'm going to wait for a deeper pullback. See how I'm below the 1-to-1s now, Jen? Everybody? So now if I took a trade, I'm trading right back into those stupid 1-to-1s. Let it get above. Let it break. It's the same thing always, guys. Momentum, path. Momentum, path. There was a quick little snippet to make a little bit of cash. And back down. Hey, Shadow Picks, have a good one, man. Have a good one. Thanks for being in here and chit-chatting with us. So now, Jen, with these triggers down, I've got to pull back to something solid. I've got to look for a close on the correct side of my small triggers, and I need to make sure I have room back to those darn things that already stopped the market once. I'll trade with the large chart, but I have to have room to get back to where I need to be. Does that make sense, everybody? Trading View. That was live. That was some quick, pretty easy money. 32.50, 32.50, 36.50. I don't know. We made about $100 there. Made about $100 there. What's the S&P doing? Smalls are up, large are up, strong side of the smalls, but I'll be darned that area stopped it like it was getting paid to do it, guys. Like it was getting paid to stop that market. Termination. There's our reversal coming from a strong bottom. Need to get some triggers up. Need to get some things through. No, really? Divergence on the potential to break, failure. Guys, I'm telling you right now, and I have absolutely no qualms about saying it. If you didn't believe the rules or the plan were effective, we have watched it avoid losers all day long. We have watched it take winners. The only thing you have to do is learn them. That's it. What do you guys want to talk about? Andy, you have an appointment tomorrow? That's okay. I'll try not to say too much smart stuff while you're gone. It's hard for me, though. I'm brilliant. Not really. John Novak software. Nexgen software makes me look brilliant, guys. One of the things that's really cool, and somebody said this once in the room, I don't remember who it was or when it was, They go, well, Mark, it's easy for you. You make the chart reads easy. You look at them and you know exactly what's going on. I'm going to share with you guys how I do that. Are you ready? Does everybody notice that the market is not moving right now? There's no up, there's no down, right? There's no fear of loss, there's no anxiety about targets. On a still chart, where the tail was circled, right? I can identify momentum. I can say to myself, that's strong triggers. That's the best of the best. That's what I'm looking for. On a chart with absolutely nothing moving, I can say it's not a clear path, but it's the potential. Guys, if you know those two concepts, I could hand you the microphone and you could do every large chart read that comes in. And I use the language. Have you guys noticed that I always say pull back to an area inside of triggers? And I say that same phrase over and over and over. Does everybody see the pullback to the area inside of triggers? I can read charts effectively. I can read charts quickly because this pattern looks exactly the same when the rules are met. This was Paul's perfect trend trade short. Let's see what it looks like. This is from the spreadsheet, my friends. Odds favorable momentum, had not reached the area, pull back to an area inside of triggers. All right, probably a fluke, right? Let's do this one. This was my wife's when she was learning the software. Odds favorable momentum, potential to break, entry at the area inside of triggers. Well, she's married to me, so certainly she had an advantage that you guys don't. Let me see this one. Odds favorable momentum, nothing in the way, pull back to resistance inside of triggers. Do you guys see it? Now imagine a world where you clicked on every link on this spreadsheet and you said, this is the pattern I'm trying to learn. This is the pattern that I want to be able to repeat. This is the pattern that repeats itself on every market. Guys, that's how traders become effective. That's how traders become successful. It's not because they catch every move. Let me find, oh my gosh, let me find the picture. Hunter, we're going to put you on a pedestal today, my friend. I hope that's okay. Let me get these up here. This was it right here, guys. This was yesterday. Hunter played video games on the side, probably played with a cat, got a snack. I don't know what you guys eat over there in Europe, bangers and mash or whatever you call it, right? And then finally, his rules are met. And he makes $550 over the course of 10 minutes when he spent 3 hours doing absolutely nothing. Guys, if you learn this pattern and learn to trust this pattern, what happens is you don't care about the downtime. You don't worry about the downtime. You don't try to go long with divergence on a 50-50, right? You don't try to go short into support because you know it can hold. You don't try to go long into resistance without momentum. You don't try to beat the pivot stop out. You don't believe that 2 triggers is enough when there's divergence on the smaller chart. This is day trading. When you trust your patterns, it takes all the emotion out, guys. When you trust your patterns, that's when success shows up. So if you're bypassing learning your patterns, if you're bypassing the study, if you're bypassing the feedback, guys, you're making life harder on yourself than you need to. There's only one reason to enter a trade, and that's because the rules are met. Because the rules are simply a description of a pattern that has been proven to win more than it loses. And once you verify and trust that pattern, There's no reason to not get into the market when your rules are true. In the same token, there's no reason to get into the market if you can't seem to find an edge. And because you know every 10 trades you're likely to win 7 or 8, and you're likely to lose 2 or 3, you've accepted that you'll never know the outcome of your trade. But you know that it's going to win more than it loses because of your study, and you won't hesitate to take that trade. Why will you exit? Management, guys. Management's hard. You greedy mofos, I want all the money. I want every tick. I want every dollar. Guys, exits are taken at profit targets. Typically, that's going to be a big, ugly fib on your large chart. It's going to be a zone on your trading view chart. Or when the advantages go away. To greed or not to greed. Guys, I have been up thousands in a day and given it all back because of greed. I would wager to say everyone in the room has. So you learn to temper it, and you say, it's only the potential to break. It's only 2 triggers. Divergence prints on the trade. Maybe it's not your trade. Maybe it's not your trade, right, Jen? All the momentum, only 2 triggers, and it's not just the divergence high that didn't break. It's also that fib that didn't break. And if you enter at 68, your stop belongs all the way down at 54, 53. That's a lot of risk. It went up, but the rules weren't met. Not your money, right, Jen? Not your money. All right, Pablo. Triggers were way too strong on the small chart to have longed. I like that. I can't go long. Let me think about shorts. Entered on what I thought was a good pullback to the area. What was your area? The zone? And the HVA? Oh, you went long. All right. You went long. You went long against momentum. All right. You went long against strong triggers. Your large chart supports it, right? Your large chart supports it. Triggers up. You're in the transition side of the triggers. You're above all the trouble. So, Pablo, when you got to the mid-band, they head faked you, brother. Did that close above? Did they get you on a close above right there? Sometimes they'll do that. Yeah, all right. So you followed rules. It just didn't work. Where's your stop? 1375. Did you get out break even? It's hard to read that. It looks like you wish, loser. 1375. Where did they get you? 1275? Just below the bar that got you in? So you were in at 1375. Oh, you entered at 1975. Ah, okay. They got you at 1375. It's hard to read that a little bit, but so here's a question you could ask yourself, Pablo. Did you have room back to the zone and the one-to-ones from your entry? Not really. Trading right into it. And sometimes that's okay if your strong side of the trigger's over here. So let's see how we can turn this into a lesson. I love these lessons, guys. These are good. And Pablo, you're an absolute rock star for being willing to post a loser in the room. So the trend is up. The smalls are up. You are at entry, transition, side of smalls, which means that price is inside. Does that make sense, everybody in the room? When he took the trade, he wasn't strong side of the triggers. He was actually inside of the triggers, which is kind of a transition, which means that it's not the best look, but it's still only long trades. And then, Pablo, you were clear skies above. It's a good look for a long trade. Does that make sense, everybody? The large sharks say, hey, Pablo, let's go look for an opportunity, right? Pablo says, well, my triggers are against me. I need to wait for that mid-band and to close above. Am I in your head so far, Pablo? Sound about right? So far, you're 100% on board. Dude, you are right where you're supposed to be. When we get to the mid-band, this is where it kind of went sideways. And you're absolutely right. Triggers were way too strong against that trade. Huge separation, awesome momentum. And man, they'll do this, Pablo. They'll give you that little head fake, right? One of the things you guys can do in that situation, and I had to learn this the hard way. I really did. One of the things you can do in that situation, and I think that, well, there's the same look on the S&P, right? Let's go see if we can find a look that gives us what I'm talking about. Dun, 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 dun. Here we go. And we won't even worry about the large chart yet. So I want you guys, woo, we'll get rid of all that mess. Goodness gracious. I want to focus on the market getting back to the mid-band. And does everybody see this as really strong triggers? That's important. You'll see the small triggers. You'll see price start to weaken the triggers. And when the small triggers finally roll, that's your bar. And that's the one so you don't fight strong triggers. Let the small triggers roll. It doesn't guarantee a winner, obviously. I don't know what the large chart was doing, but I love this look. They go from wide to narrow. They start to pinch. That's where that momentum starts to slow down. And it takes a little bit, Pablo, to recognize it in the moment. Because the market with that much momentum is typically moving pretty fast. Trying to see where we're at. There we are. Does that make sense? Dude, it was the perfect read. You had everything that you needed. It's just that momentum. And you called it. You self-assessed perfectly. So, just a lesson. Good stuff. And then your exit was 1375, which was below the bar that got you in. And that's perfect. It's a lot easier to see after, right? Were you listening when I said why I can read charts so effectively? Because if you go back and do just a little bit of self-assessment, right? It's easy when there's no pressure of money. It's easy when there's no threat of loss. That's why going back and looking at what you've done is extremely helpful. The smalls have rolled. We're below trouble. Right into an outer band. And 87.75. Guys, I've got a line right here. 87.75. If the market gets back above that green line, that trouble, that divergence low, I'm cool not taking a trade. I'll trade from that green line, but I don't have a zone, right? So I need to get below and break and then look for opportunities. But do you see how you can use price versus trouble to make sure that your entries are on the good side of trouble? That's a little trick that I taught myself that I want to share with you guys. All right. This is where I want everybody in the room to give me a why. Or answer the question, what's the biggest killer of potential to break trades, guys? Does anybody have any ideas on that? Loss of momentum, divergence. Loss of momentum. Is it okay to not take the trade with the loss of momentum? Jen, didn't you say that went up? Is that not the same trade? 50-50 right there. Jen, you said it went up. Did it really? That is crude. Or am I crude? No, this is crude. CL. I can count. Maybe you're on delay over the pond. Jen, this is where you said divergence not my trade, but it went up. Is that right? But it gave you what? It said, let's make Jen regret her decision just for a second. And then a second divergence. So Jen, what did you do? You avoided. You avoided getting knocked out. Thank goodness you didn't say, oh shit, it's going up without me. Not that you would ever swear, but I have no qualms about it. And jump in at the top, right? Good job, Jen. But in the moment, guys, they're going to mess with you. Let's make Jen regret it. Let's make Jen hate that she's not in this trade. And then once she says, F it, I'll jump in and hope it goes up, let's shut the door on her. Jen, that was a great chart read, but I love that this happened after you said, well, it went up, because I could hear you sighing under your breath. It went up. But in your Margot Robbie voice, right? Boaz, all the momentum in the world, 3 triggers through, pull back to the area inside of triggers, get paid, pull back again to the area inside of triggers, get paid. Boaz making all the money in a tiny little range, right? NASDAQ's a different animal, guys. This is a 34.5, not a 13.2. It's hard to stop that much momentum. One of the things, guys, for those of you that have been shying from the NASDAQ because it's so fast on Renko, Pablo had the revelation yesterday. Minute bars are minute bars. Our minute bars are minute bars. And guys, the NASDAQ, for those of you that have been avoiding it, is very tradable on TradingView. It is very tradable on these minute bars, which I love. You guys never even noticed that whether it was NASDAQ or whether it was S&P or whether it was crude oil or whether it was gold or whether it was the euro, because it's just 15-minute bars, 1-minute bars. It's the same darn pattern. It's the same darn rules. And that little counter on your 1 minute, that little countdown that says, hey, you didn't get a close below, we closed up here, says don't take a short trade. Don't take a short trade from above the zone with all the triggers above the zone. Don't take a short trade with the trigger lines up. No room to run, right? It's that safety. It's that rules that just say you don't have to yet, guys. I know you wanna, but you don't have to. There will be a better look. Pay attention on your minute bars to tails. Have you guys learned this lesson yet? We talked about it on John Novak's. The market pushed down and it failed. It closed above the zone. And it did it here. Couldn't break the zone, couldn't break the zone, couldn't break the zone. That's your news. Spike down, still closed above, still closed above, still closed above. And then there's 2 more. Guys, this zone should scare the ever-loving bejesus out of you if you are trading directly into it. Look at this. You start to recognize these tails and what they're telling you about those areas. The sellers tried. They couldn't do it, right? The buyers tried. They couldn't do it. What a great way to identify a range. Is anyone saying to themselves, not until I get below? I hope you are. Does it happen on the S&P too? Let's see. 1, 2, 3, 4, 5, 6, 7 before they finally got below it. There they are, failing at it again. Do you guys look at this stuff yet? Are you at that point? You will get to this point where you'll start recognizing things that you didn't even know would work their way into what you're doing. I'll share one of the things that that my brother and I have been noticing. Market flow traders, you guys using these bars on market flow. I'm not saying it's an entry. I'll make this really big here. Do you guys see that breakout bar down? That white bar down? See the high volume area? Give me a Y if you see that. TradingView guys, I'm giving you something really cool. It's not a rule, it's not an entry. When you get a breakout bar and price opens, the next bar opens below that high volume area, it's more likely to go down. John Novak and I have been studying this. It doesn't fit its way into any plans yet. So let's look. Down bar opens below. Sure enough, it goes down. This is one of those things, and we'll talk about it more as I develop some way to use it. The way I'm using it right now, and let me see if I can find an example. All right. I get a breakout bar up. May have a live example. The next bar opens above the high volume area. Sure enough, it goes up. Let's see what happened. What's going on the NASDAQ? So market comes down. There's your high volume area bar coming off of the zone. Did that bar open above it, Pablo? It's hard to tell where it opens in the hindsight, and it's going up, right? So you can use this as well, guys. Let's say I'm in a long trade, and then this down bar prints, and the next bar opens below it. I'm starting to use this for management. I'm not staying below the zone. I'm staying below the white bar and taking smaller losses. So I haven't worked it into a plan yet, guys, but when I do, I'll share it with you. But this is how Nexgen got to where they are, guys, is recognizing something, seeing something, taking pictures of things, and then being able to work it into something. I'm over 6,000 pictures in 2025 so far, guys. 6,000 pictures in 2025. There's a reason my charts are read quickly. Paul, 50-50, 2 divergences. You get in and say, nope, that's not it. I'll take it from the bottom of it or not at all. Paul, you are the king of they either give me the entry I want or I refuse to take it. But it doesn't change that you traded on a 50-50 against 2 divergences, which we know is more likely to lose than win, and down it goes. Avoidable losses. Miss Linda. Miss Linda, if I send you a nickel, will you start annotating your charts for me? Because I'm going to do my read here. My read says that I don't have momentum. Do you see it? My read says that all of my trigger lines are above that divergence low. My small triggers are up. I don't have momentum. My small chart has momentum screaming to the upside on the small triggers, and you are hoping that a red line holds. Did I describe the thought process? Because that's what I see. Nothing says down, my trend has changed. I sure hope that red line holds. Am I close? Because that is the chart read. And I hope this doesn't come across as ugly, but I don't have momentum. All of my triggers are above a divergence low, and I don't have any areas inside of triggers. What did I miss, Miss Linda? Because just because I say it doesn't make it gospel truth. There may have been a different thought process. There may have been something else going on that made you okay selling that. But I don't know what it is. And I love that you got paid. But I'm not sure what it was, because I can't relate it back to any of the advantages that we teach in the room every day. Does that make sense? Right now, Linda, are you cursing my name? Stupid Mark, I made money. Why is he even talking about this? Because I want it to be repeatable, right? So you had a fib here at 0221, which means that you had a big red line that should have been on your large chart right there. Because we're not seeing that 5-1, not seeing that 5-1 fib over here. Did you know that that should be there? Because I'm going to show you how impactful that red line could be. And I'm going to show you the other side of the coin, Linda. This is a weak bottom. This is not a turn that came from a termination condition. It's floating in the middle of space. Price reached Fibonacci resistance. All of my trigger lines are 3 days below the resistance, and the large triggers didn't even roll. Those of you that studied termination conditions, can you agree that resistance is likely to stop the market? Does that make sense? You guys with me? So one of the things with the NASDAQ, and oh my goodness, Miss Linda, you're trading a 13.2 and a 5.1 on the NASDAQ, which is like doing 20 pounds of meth, drinking a coffee, and trying to do a word puzzle. These time frames are so small on a market that moves so fast. So you're betting based on the laws of termination conditions and weak bottoms that the market goes down from the fib. That one sounds better than the first one, right? That one sounds so much better. Weak bottom pulls back to resistance. All of my triggers are below. Resistance is likely to hold, sell it. No matter what the thought process was, how do you repeat it? How do you make it so that you can do the same thing and find the same success? That's why I talk about annotations, guys. Nobody in the room is ever obligated to annotate their charts. But if you post in my room and you want feedback, I need you to annotate your charts, because I can look at it and I could come up with 17 different scenarios to find an entry. Can I find a scenario that wins more than it loses? That's what the annotations describe. When you write on the chart, when you take the time to do it, what you're doing is you're writing a recipe for repeating success. That's all the annotations do for you. Or, Pablo, I don't mean to pour salt in old wounds. You go back and you say, this is where my analysis could have been better. I'm going to be thinking about that next time I take this trade. Next time I have this look, I guarantee Pablo's going to say, oh crap, those are super strong. Let me let them slow down. So again, no obligation, but it'll pay dividends for you guys in the long run. It really will. Three divergences in the same price range, push the market lower, easy to avoid that loss. The market still may go up, but it's not easy yet, guys. Divergence on a 50-50, the market pushed lower. Weakening triggers right at Fibonacci support and divergence. Who can predict what the market's likely to do here? Who can look at this chart with weakening triggers right at a fib, no triggers through, and divergence and say the most likely outcome is? Not guaranteed, not definitive. It's going to figure itself out. Got to skip early. Hey, take care, Morgan. Morgan, that was the most solid one bar, $250 I think I've ever seen. Nicely done. The large chart says down, guys. The momentum doesn't support smashing through areas. The area isn't broken. Divergence is showing a loss of momentum. The roll of the triggers is showing that there's already a fight. Is it okay to do nothing and see what happens? It could still break. They were pretty determined from up there. But until it does, it's not my money. I can't find rules to support a short trade. Not yet. It could come. All right, what do we want to talk about? Did anybody catch the chili dog look with all that momentum getting below areas? A lot of you guys are taking those. That idea that with momentum and path you can find a way. I think for a lot of you, that's going to be the second trade. And make sure you thank Ron for that. I did a lot of study on it. I'm going to drop it in the room for you. It's still a checklist, talks about management, how to study it, and pictures of your trades. Guys, that was mine. And I messed it up a lot. So I took a lot of pictures of when the rules are not met. For those of you that are looking for that next trade, that's a pretty good one. Hunter, now that you're getting comfortable with the trend trade pattern, that's a little gap filler. Andy V, the same is true. You guys that are on Ninja Trader, it's awesome. I haven't really figured out how to do it in TradingView yet. I know it needs momentum and a clear path. I actually think Pablo is going to crack the code to that one because he loves momentum on two charts and nothing in the way. So he may create that trade. Who knows? I don't know. You guys will be surprised at what you see when you start talking about advantages. When you start breaking it down into basic concepts. When you start just saying, this is what I see, this is what it means to me, this is how I'm going to react to it. This will get me in the market, this will keep me out of the market. But I'm at the point where I'm flapping gums, so I'm going to shut down YouTube.